Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. We had the much awaited Jerome Powell speech during the Jackson Hole symposium on Friday night. Just to recap, markets were dollar bullish at that time based on the positioning. We also had ECB Chief Lagarde's speech. And this week we have got some key events, including the US GDP, Eurozone CPI, China's manufacturing PMI, and initial jobless claims from the US. JK, good morning. Please take us through the post Powell and Lagarde market positioning. Do any of these speeches change the rate hike probabilities?
Good morning, Swaraj. No, nothing. I think Jackson Hole was a damn squib, I would say, because we don't have any drama which is associated with the speeches which the market was expecting. And in his remarks, Powell actually drew a middle path. He was neither too hawkish nor too very, dovish, and completely data-dependent approach that will be there. And it's no different from what we have been hearing all along, particularly since the last Fed meeting. And markets had some volatility, but so it was all within the range. So we don't see anything extraordinary coming out of it. In fact, on the ECB side also, policymakers have been concerned about the deteriorating growth prospects, and momentum for a pause in its rate hike is building. But Lagarde, again, in her speech, did not deviate from her known cautious remarks, and there was no hint of dovishness. Hence, euro yields and euro USD also recovered their losses post her speech. Then Governor Ueda was somewhat, dovish, which market did not expect. And he said the underlying inflation in Japan remained a bit below Japan's target, 2% target. And as a result, bank will maintain the current approach on the monetary policies. In fact, he even expects inflation to decline from the current levels. And finally, on the UK side, the rates in UK might have to remain high for some time. That is what the bank, Deputy Governor of Bank of England said on Saturday at the concluding session of the Jackson Hole. And central bank is seeking to curb the highest inflation rate among the big economies. And he also said knock-on effects of a surge in prices, such as pressure on employees to push up wages, has led to the record growth in pay, and they were likely to keep the inflation high as well. So nothing extraordinary, and markets have continued to be in the same ranges. But we have a very, very hectic week ahead after some dull days in the last few weeks. So we have the consumer confidence, jobs data, then more on jobs through ADP report, the challenger job cut, weekly jobless claims, and finally ending with the monthly jobs report, which is announced or bang on the first day of September. So there is an expectation that the unemployment rate remains same at 3.5%, whereas the non-farm payroll expectation is lower at 1,70,000. And before that, we also have the PCE core inflation, which perhaps will be some important indicator towards the policy going forward, and also the GDP number, which is expected at 2.4%, for as per the second estimate of on the European side. Also, we have numbers like German inflation, German unemployment, and Eurozone inflation, which is more important. The final reading on the PMIs, which showed a dire state of the Eurozone economy, needs to be watched, whether there is any further slide or whether it is actually better than what it was initially estimated. So that a lot of interest on how the European data will come about. In fact, on Friday we had this IFO estimate of future growth in the German economy, which stood at a 10-month low of 85.7 versus 87.4 that was read in July, and forecast was for much better at 86.7. And even the current assessment fell to its lowest level since August 2020. Therefore, the negative reading on the Eurozone economy continues. Considering that, it's quite surprising that Euro has been holding up well. Now, on China, of course, again, we have the PMI, which will be very closely watched. The all-important Xiaxin manufacturing PMI will be published on Friday, the 1st of September as well. At the same time, China has stepped up its efforts to slow the fall of yuan. They have asked domestic banks to scale back their outward investments through bond connect schemes. And also, they announced a cut in the stamp duty on equities trading by half, by 50% rather. So market has found some good support on the equities, but not really impacted the yuan. On the market impact post Jackson Hole, we did see some short-term volatility, but things seem to have settled down. Only thing of note is the Japanese yen, which has crossed this previous high at 146.50 and trades comfortably there. So now market, which was speculating on intervention above 146, now seems to be settled that intervention will not happen until we see 150 on the yen. More so because the interest rate differential between Japan and US is widening, and general dollar is strong. So there's nothing unusual about the Japanese yen weakening. Euro, very important, supported 1.0750 to 70. A breakthrough that is going to be quite ominous and can move towards 1.06, quickly. GBP as well, very strong support at 1.25, but a fall below that can be quite ominous for the GBP as well. Overall, dollar stays supported. Chinese yuan may be some stability in the short term, but I think structural issues continue to haunt the currency. Therefore, technical target still remains at 7.45 to 7.50. On the rupee also, after the big slide in the USD from over 83 to 82.36, things have stabilized because the move was driven by technical positioning and not driven by any large flows. So we've not been hearing of any large flows in the pipeline as well. Therefore, it should remain rangy, but possibly the resistance at 82.80 will continue to hold. Therefore, we should contend with the range between 80 to 30 and 80 to 80 in the short term until central banks once again shows the way. Unfortunately, we are always been dependent on the direction given by the central bank within the large range of 82.5 and 83. So and that's what the market will be looking forward to. Thank you.
Thank you, JK. And a quick summary: Jackson Hole was quite damp, no drama post this speech. Even Powell was quite neutral and taking a data-driven approach. Other speeches were also not that impactful, so broadly no major impact except for the Japanese yen, which has moved higher than the 146 level. We have a hectic week ahead because we have got a lot of data on consumer confidence and as well as labor market data from the US. PCE core inflation will also be something markets look out for. When it comes to China's manufacturing PMI will be closely watched. For rupee, things have sort of stabilized. It remains in a range with 80 to 80 as a resistance. 80 to 30 to 80 to 80 is the expected range for the week. That's it from us today. Tune in tomorrow for another round of fresh updates. Thanks for listening.